Hello, this is the Global View. I'm Andrew Gagan. Thanks for joining us on this Tuesday here at AusBiz. Let's get across what happened overnight. Global equities gaining while the US dollar and bond yields rose and precious metals came under further selling pressure. Now on Wall Street, the S&P 500 rallied to a record high, buoyed by gains in AI-related companies, while smaller companies also rose sharply, with the Russell 2000 index retracing the previous session's losses. Alphabet and Amazon both rose ahead of their quarterly reports later this week that will give investors an additional look at the race to dominate AI. And AI-related data firm Palantir climbed. That was ahead of its quarterly report after the bell. Chip makers benefiting from AI-related demand for their components also rallying. Disney shares fell heavily after the company posted quarterly earnings above Wall Street expectations, but warned of a decline in international visitors to its US theme parks and a slump in earnings at its TV and film division. US listed shares of rare earth miners rose in pre-market trade on reports that President Trump is set to launch a strategic critical mineral stockpile with $12 billion in seed money. And a 5% fall in oil prices saw energy stocks fall, while that boosted airline shares. And further falls in precious metal prices exacerbated a sell-off among the miners, or we did see a late rally there in Barrick. Well, US factory activity grew for the first time in a year in January, with new orders rebounding sharply, but import tariffs raised raw material prices and strained supply chains. New orders, employment and prices paid indicators all rising. Meanwhile, FOMC member Raphael Bostic, who retires this month, says he didn't project any interest rate cuts this year, saying, "I think we have so much momentum in the economy that we need to keep our policy rate in a mildly restrictive stance. If you look at the returns to profits in so many businesses, I think it's hard to make a case that our policy stance is heavily restrictive." Well, on the geopolitical front, Iran says talks with the US over a new nuclear deal could get underway in the coming days. And President Trump has agreed on a trade deal with India that slashes US tariffs on Indian goods to 18% from 50% in exchange for India lowering trade barriers, stopping its purchases of Russian oil and buying US oil instead. Well, US Treasury yields have risen as traders consider if Federal Reserve Chair nominee Kevin Warsh will take a hawkish or dovish approach when he assumes the role in May. The yield on the 2-year note rising to 3.55%. The 10-year is around 4.25%. And the Australian 3-year government bond yield has risen to 4.32%. Markets pricing in a 75% chance the RBA cash rate will be hiked by 25 basis points at today's meeting. And the US dollar index up more than 0.5% on the day. The Aussie dollar is trading at 69.5 US cents. Commodity markets have slumped, led by deep losses in gold, silver, oil and industrial metals. Gold sliding 5% to its lowest level in 2 weeks, to be down 17% since Friday. Currently trading at around $4,660 an ounce, while silver falling another 7% to be around $80 an ounce. And copper's down more than 2.5%, iron ore 1% lower at 104 US a tonne. And oil prices have fallen sharply after President Trump said Iran was seriously talking with Washington, signalling a de-escalation of tensions with the major oil producer, while the stronger dollar also put downward pressure on prices. Brent crude at $66 a barrel, and Bitcoin is trading around 78,000 US dollars, having fallen below 76,000 overnight. Well, let's get across those market moves. Steve Sosnick is Chief Strategist at Interactive Brokers. He joins us again now. Steve, welcome back. A lot to unpack since we last spoke, of course. Let's begin actually what we're seeing on the equity market, because you make the point there that late yesterday, our time, futures are indicating that there's going to be a sharply lower session on Wall Street, reflecting what we saw here on Monday. But we actually saw a record in the S&P. What was driving that?
Good morning, Andrew. I think it's just the relentless momentum, the relentless desire to chase any rally, the relentless dip buying. It also didn't hurt that it's the first of the month, so I don't know if it's actually true or just a wives' tale, but everybody believes that new money comes in at the first of the new month, so that was another factor. The mood on Friday was just plain strange, but we on Thursday and to some extent Friday and certainly overnight, we recovered from relatively big dips, but the market just continues to bounce back. It's a resilience. I don't know if it's really justifiable in the long run, but I mean, I can't fight the tape. The market is telling us something. But when I, think about how low we were at our worst on Thursday, over 1.5%, and then sort of, flirting with some bad numbers on Friday, and then today overnight looking terrible, but then, literally just once we started moving off the lows in the futures, we just followed along. Maybe maybe the ISM had something to do with it. Maybe the fact that the dollar is off its lows had something to do with it. Maybe it's just some rotation out of some of the speculative money that had moved to metals and other, I'm just going to call it non-stock assets moving back into stocks. It's hard to pin it down, but this is a tough tape to fight.
What did you see as the catalyst, particularly when you go back to Friday and that precipitous fall in precious metals? We saw the US dollar rise on the nomination of Kevin Warsh. Now, as we've been talking about, you point this out too, is that the markets, I guess, are trying to work out, is he a dove, is he a hawk? I guess they were sort of essentially pricing in the fact that he's more likely to be hawkish, and that seemed to be one of the chief catalysts for that, as I said, that sharp fall in precious metals.
Yes, but the fall in precious metals started before the announcement was made. At 7 a.m. on Friday, our time, when the president made the announcement, we'd already started to see precious metals come off. Now, they accelerated that to the downside, but remember here that we'd gotten into parabolic moves, and parabolic moves are inherently unstable. They're telling you that something's out of whack, whether there's a seller that's in extreme pain, whether there's buyers that are just overly exuberant and just willing to chase the momentum. But bottom line is those moves unwind unpredictably and spectacularly. And for better or worse, they kind of did both. But you just pulled up the chart here on gold, and you'll see that all we did was we've gone back to what was the trend line. Gold was actually, unlike silver, in more or less a nice linear, solidly higher trend, but certainly a linear-ish trend. And look what we did. We basically just came back to the trend line. Silver has been parabolic for much longer. Gold only went parabolic a couple of weeks ago. And I think this is just a reversion. I'm not going to say reversion to the mean, but more of a reversion to the trend. And one of the things that I pointed out, I guess, rather presciently on Thursday, and by the way, you guys can all subscribe to the stuff I write on interactivebrokers.com, IBKR Campus. On Thursday, I pointed out that on Wednesday, Thursday, Friday, I pointed out Wednesday, Thursday, there were sort of 10% intraday moves in some of these commodities. Now, they ended up not having 10% moves when all said and done. It was more +5, -5. But what it told me was that volatility was increasing, and volatility tends to increase at turning points. It didn't mean that the next day was going to be the disaster that we thought, but that it turned out to be. But we did sort of imply that, the band might be, the game of musical chairs might be coming to an end. The band might be getting ready to take a little bit of a breather. And I think that's what it was.
Yeah. All right. Trying to find that chair very quickly, the one that was left. So, just to the point of Kevin Warsh then, what's your read on him, Steve? Assuming, of course, his nomination is accepted.
I think once the political winds go behind us, I think he does get accepted. I think the biggest impediment in the short term is one of the senators, Senator Tillis from North Carolina, has vowed to block any nominee until the legal ramifications against Powell and the Fed are removed. We'll see how that goes. I think they probably do. I think we do probably find cooler heads prevailing. But you never know how dug in the other side is. But my question here is, I really can't tell if he's hawkish, dovish, or a dove in hawk's clothing or a hawk in dove's clothing. I think actually I'm leaning toward dove in hawk's clothing because I think he had no choice but to portray himself as dovish to get the nomination. I don't think it hurt that the president thinks he looks like he's out of central casting. take that as it will be. To my mind, that's what ruled out, Governor Michelle Bowman, because she's 5'1" and not as photogenic as opposed to someone who's, over 6 feet tall and considered that by the president. It's superficial, but take it for what it is. But I do think, in his first term, when he was a Fed governor from 2006 to 2011, he was actually quite hawkish and quite an inflation fighter. Now, there are some people who say that he was hawkish because he was staunchly against President Obama at the time and basically just, during the global financial crisis, did not want to see him succeed. I don't know that that's the case. I think that's a bit extreme, but it'll be interesting. And remember also, you need a consensus on the Fed. And one of the things that Powell told us last week was that there was a very strong consensus for standing pat. There were two dissents. One was from Stephen Myron, who was, going to dissent toward lower rates no matter what. He's made that clear. The other one was Christopher Waller, who was still in contention to be Fed chair at that point. And so it was perceived widely that he went dovish to try to salvage his chances at a nomination. I don't know, but this is where but we see the dollar recover. The dollar had gotten oversold. We certainly saw some recovery there. On the other hand, we saw long bond rates tick up a little bit. So if he's a real inflation fighter, you'd expect to see the opposite. So the market's trying to figure this out now, just as I am, just as everybody is.
Gee, that is a stark reading of how Kevin Warsh was picked, perhaps underscoring the reality show that's playing out in the White House. Steve, terrific to catch up as usual. Thanks for joining us from Interactive Brokers.
Thanks, Andrew. Talk to you soon. Take care.
Let's turn to the local market then ahead of our open in just a couple of minutes. We're looking for a very positive session, essentially retracing those losses we saw yesterday on the local market. So S&P ASX futures, they're up 1.1%. Now, of course, the key event today, very much the RBA, interest rates, expectations, market pricing, and a 75% chance they will be hiking by 25 basis points, and we're going to get right across that in real time with our analysis here at AusBiz. Meanwhile, also get across some corporate results, given we are in earnings season as well. Stay with us for the open.